In this presentation, we will work a comprehensive problem related to a public university. The information is going to be on the left-hand side. We're going to enter that information into the blue area on the right side, including the general journals, as we can see here. Then posting from the general journals to the trial balance worksheet. The trial balance worksheet posting into the blue area, the worksheet containing the beginning balance, trial balance, which will be in balance, then the postings, which hopefully will be in balance, and then the ending trial balance, which then will be in balance. This will allow us to see the transactions and the related accounts as we go through and post transactions for a time period. This will be in order with assets on top, then liabilities in orange. Then we have what would be the equity section in a for-profit type of organization, here being the net position section. So net position section here, in essence the same. Just keep in mind the terminology. We have a public university. Now we're looking at net position, similar to the equity section in a for-profit organization, or net assets in other types of nonprofit organizations. And then down below, we're going to have what would be similar to the income statement type of accounts, those temporary type of accounts, those accounts that would typically close out to what would be the equity section in a for-profit organization, closing out here to the net position section. And that's going to be the worksheet we will work on. Then we'll put together a statement of activities at the end of the problem. Okay, so let's scroll back over. We're going to then do a little bit of maintenance before we start out here. We have two sets of general journals because we will have quite a few general journal entries. Therefore, we're going to hide one of those sets of the general journal so that we can work as efficiently as possible. We're going to be hiding the second set. We're going to be hiding from column J. So we'll put our cursor on column J like so. Left click on it, and we're going to drag over to column N. And then let go. Then we're going to put our cursor on that selected area, right click on it, and then we're going to hide. So don't delete them, we will hide them. All right, and then we're going to go back to the left and see what we have. And we're going to start off here with good old number 1, where we billed tuition and fees and gave scholarship waivers of $1,467,000 and $245,000 respectively. So we're going to say we, in essence, billed them, but have not yet received them. So this would be similar to us basically sending out an invoice for a for-profit organization where we would debit accounts receivable, here debiting another type of receivable, or the same type here because it's going to be the public university, that being accounts receivable. So accounts receivable is going to be going up. It's going to be going up not by the full balance here, but the net between the two, because we gave these scholarships, which means we're not ever going to get the cash. Therefore, we're not increasing accounts receivable by the $245,000 amount. So we're going to say it's going to be equal to a debit equal to this $1,467,000 minus the $245,000. Okay, and then we're going to have the tuition and fees, discounts, and allowances, which will be representing that $245,000 that was given for the waivers. So this will be equal to, scrolling down, we want the tuition and fees, discounts, and allowances. And that is going to be in cell G4. Within G4, we're going to say that is equal to the $245,000 and enter. So there we have that. And then we're going to post the other side to what would be similar to the revenue type of account, here being the tuition. So it's going to be equal to the revenue kind of account, the accounts in the temporary section, the top of the temporary section, that being revenues related to tuition and fees, and enter. All right, so now we're going to have the plug formula on the outer side here, which will be the negative sum. Good old negative sum. And that'll pick up those numbers. And so we're adding them up, flipping the sign so that we now have a negative over here. All right, that's our first transaction. If we were to add them all up, it adds up to 0. The debits minus the credits then being 0. We're going to then post this out. We're starting off with the accounts receivable. Accounts receivable is going to be our second account in the trial balance. We're going to be posting it into the middle column. We are going to post it to cell Q4. So within Q4, we will say equals, scroll over to the $1,222,000 and enter. That's going to increase the accounts receivable. Then we have the tuition and fees, discount, and allowances. So we're going to scroll back down to the tuition and fees, discount, and allowances. We are in cell Q19. Within Q19, we will say equals, scroll back up to the $245,000 and enter. So there is that number. Then we're going to pick up the revenues and tuition and fees. Revenue and tuition and fees, that's going to be in cell Q18. So within Q18, we will say equals, scroll over to the credit of the 1,467,000 and enter. There we have that. Scrolling back down, we see that we are back in balance indicated by the green zeros. So that's going to be our first transaction. We're going to say, well, now we'll take a look at the second one. As we continue to the second one, we're going to start to make them green as we go. That'll help us out, hopefully, to know where we are and not get mixed up. Not that I ever get really mixed up, but no, I get mixed up a lot. So the green helps me a lot, so we put the green there. That'll help us keep track of where we are going. Unearned revenue is earned during the period. So this is going to be unearned revenue that we have now earned. So this is going to be similar to a for-profit organization. Let's consider what that means. We have the unearned revenue account here. How did that get there? Because we got cash for something that we didn't yet earn. So in essence, we debited cash. We couldn't credit revenue because we hadn't yet earned it in accordance to a revenue recognition principle. Therefore, had to put it into a liability account until it was earned of unearned revenue. Now, when we earn it, we're going to take it out. So we did whatever work we needed to do in order to earn the revenue, which I would assume would be some educational work, right? And we're going to now debit the unearned revenue, taking it out of there and putting it into the revenue accounts. The cash has already been received. Now we're simply replacing it from a liability to revenue, given the fact that our obligation, what we have done in order to earn the revenue, has now been completed in accordance with the revenue recognition principle. So we've got the unearned revenue amount then, which we are going to pull over here. We're going to say the full 31,000 now has been earned. So we're going to pull that number over here, the 31,000. I'm going to do that by saying negative of the 31,000. Now you don't want to pick up this 31,000 because that will create a circle reference. You want to pick up this 31,000, then we'll post to here, bringing this balance down to 0. So we want to pick up this 31,000 in total here. And then the next is going to be the same, 31,000 in the revenue and tuition, but it will be a credit represented by the negative number. Let's go ahead and post this out then. We've got the unearned revenue. Let's see what that does. We're going to scroll back down. Unearned revenue, we are going to be in cell Q13. Within Q13, we will say equals. Scroll over to that 31,000 and enter. There we have that, making it go down to 0. Next, we've got the revenue and tuition and fees. That's going to be down here in cell Q18. So within Q18, there's something in there. So we're going to say F2 to go inside of it and then say plus F2. And then I'm going to scroll over. So that's the way you can go in there. You could also double click on it, of course. But F2 is with the keyboard, more geeky, therefore better. So we got that. And if we scroll down, we're going to say that that is in balance with the green zeros. So that looks good. Now we're going to go back up and we're going to pick up the next number. So I'll ungreen number 3 because number 3 has been completed. And we'll move on to, actually number 2, that was number 2. Then we're going to move on to number 3. Now I won't green up number 3 because it's going to be fairly quick, even though it's a long kind of thing here. Notice received from the federal government that funds may be received in the current year for costs incurred in creating student grading criteria. So notice we got a notice from the federal government that we're going to receive funds, possibly a grant, that that funds may be received in the current year. But we haven't got the funds yet, and so we're not sure. So we're not actually going to record anything for this transaction. We haven't got the funds. The grant hasn't been received yet, so we're not going to record basically a receivable on this at this point in time. So that means that number 3, we're going to say has no transaction. I'm just going to say no entry. And then, so now we can move then to number 4, which will have a transaction, and therefore I'm going to make it green to make sure we know which one we're on with that one. And that says we received unrestricted appropriations. So we got money then, appropriations. So cash is going to go up. So that's good. We know what cash does. Cash is easy. Cash does the same thing as a for-profit organization. It goes up, it goes down. We know when that happens pretty clearly most of the time. So we're going to pick up the cash, and that's going to be the $3,065,000. That's the debit and the credit. Then the other side is going to go to a type of revenue. We're going to say this is going to be revenue from the appropriations. So I'm going to say, let's look for a revenue account down here, which is going to go up with a credit. And we're looking for revenue related to appropriations. So revenue related to state appropriations. Here we have it, and enter. So there's that one. Then we can post this out. So we got cash up top. So let's go up to top to the cash account. So we're going to be over here in cell Q3. Within Q3, we're going to say equals. Scroll over to that 3,065,000 and enter. So there we have that. Then we're going to go down to the revenue for the state appropriations. Scrolling down to the revenue for the state appropriations, that's going to be in cell Q20. Within Q20, we're going to say equals. Scroll over to that 3,065,000 and enter. It's going to go up in the credit direction. Let's see if that puts us back in balance. The green zeros indicating that it does. So we are back in balance. Notice this is the change, kind of like the net income, the change in the net position. We can call it activity down here. Okay, so now we're going to go back over. And we can say we can ungreen number 4 and we can move on to number 5. So we'll ungreen number 4. Number 5 is where we are at this time. And that is the purchase of equipment with cash. So we purchased equipment with cash. So we're going to say number 5, this is going to be very similar to a for-profit type of organization. When we purchase the equipment, we don't expense it, but we put it on the books as a capital asset, as an asset. Generally called equipment for a for-profit organization. We're going to call it here a capital asset. So we're going to say it's a capital asset, increasing. Main idea here is we're putting it on the books as an asset as opposed to expensing it, and then we will expense it with the use of depreciation. So we're going to say the amount is going to be for the $542,000. The credit will be for the same amount, and we paid cash for it. Therefore, the credit is simply going to go to cash. So we're going to credit the cash amount and enter. So there's going to be our transaction. Let's go ahead and post that out. We've got the capital assets. So we're going to scroll back up top, pick up the capital assets. That's going to be in cell Q9. Within Q9, we're going to say equals. Scroll back over and pick up that $542,000 and enter, bringing it up in the debit direction. Then we have the cash. So here's cash down below. We're going to scroll back up to pick up the cash. That's going to be our first account. That's in cell Q3. Something is in it. Therefore, we're going to go into it. I'm going to do that with the keyboard by saying F2 plus F2. And then scroll back down to pick up the cash amount, the credit of the $542,000, and enter. So there we have that. If we go down, we should be back in balance as we are, indicated by those green zeros. Then we can go back to our transactions on the left side. And let's see what we have next. I'm going to ungreen number 5, indicating that it has been completed, because we did indeed complete it. And then we're going to go to number 6. Number 6 is going to be greened up then. Number 6 says we have a cash contributions from alumni of the $828,000. Amount that needs to be used for construction project is $100,000. In other words, we've got a total of this amount. Of that amount, they've put restrictions on some of it for the contributions of the $100,000. So we got revenue of the total amount, but part of it will be then restricted. Now, as we record this, it will be a little bit different than what we look for other not-for-profit organizations, including the non-public school, because we will be looking at this $100,000 that will be restricted, but we're going to do that when we close out the temporary accounts to the net position process. So here, we're going to record it just as we would. We're not labeling, in other words, in our accounts as to being restricted or unrestricted, but we do have to keep in mind that account and that restriction so that when we close them out properly to the proper net position account, which does indicate then the restrictions for them. So we have the net position, net investment in capital assets, then we have the net position restricted and unrestricted. So keep that in mind as we do this. We're going to say that the cash will be increasing. Cash is going to be increasing. And so cash is cash. That's nice. It doesn't do anything funny for us. And that's going to be for the $828,000. That's going to be the same for the debit and the credit. And then we're going to go to the revenue and gifts and grants. So we're going to have the revenue side of things. Note what I'm doing here is I'm crediting simply the entire amount to one account. And we're not having two accounts, one indicating with restrictions, one without. We're simply going to the same revenue account for both. And then we'll be breaking those out once again in the closing entry process. So this is going to be equal to the revenue related to gifts and grants. So there is our transaction. We're going to record this now. We'll start off with the cash up top. Let's go up top to cash. That's going to be in cell Q3. Within Q3, we're going to say F2 plus F2, then scroll back down and pick up our number of the 828,000 and enter. That increases this amount. Then we're going to say the next one is going to be revenue for the gifts and grants. That'll be down below. So we are in cell Q21. Within Q21, we will say equals. Scroll over to the 828, and enter. That brings it up in the credit direction. That then puts us back in balance given by the green zeros. And you can see the change in the temporary account similar to the net income number, the change in the net position. All right, let's see what else we have. We're going to say number 6 has been done, and therefore we will ungreen number 6. And then we're on number 7, so we will green up number 7. And it says that we have interest expense on bonds paid. Interest expense on bonds paid, so we're going to be paying the interest. And that's going to mean that cash is going to be going down. So let's go ahead and do that first. Cash is on the bottom. I'm going to put that underneath the number 7 to indicate that it is on the bottom because it will be a credit. So the cash is going to be a credit. And the amount is going to be the negative of that 51,000. So a credit of the 51,000. Then we're going to have a debit. So the debit is going to be here. And the debit will be interest expense. So interest expense, just like we would expect for bonds in a for-profit type of organization. Nothing really different here. We have the interest expense and enter. There is our transaction. Let's post it out. So here's the interest expense up top. Let's scroll back over. Pick up the interest expense on the side. We're here in Q26 where we will say equals. Scroll over to the interest expense and pick up the debit of the 51,000, bringing it up in the debit direction. And then we're going to go to the cash. So here's the cash. Let's scroll up to the cash up top in our trial balance. We are in cell Q3. Within Q3, we're going to say F2 plus F2. Scroll back down, and we're going to pick up the credit amount in cash of that 51,000 and enter. And there we have that. That then should put us back in balance, as we can see down below by the green zeros. Okay, let's see what we have next. Back to our data, we're going to say that number 7 is done and ungreen number 7. Move on to number 8. Number 8, we'll green that up. It's a little bit longer, looks a little bit more complicated, a little bit more intimidating. That's okay. We're going to say student tuition refund made was $119,000. So we'll record that one first. So we're going to break that out in one transaction, number 8. This will be the first number 8. We could call it 8A, but we're going to say that student tuition refunds made. So we made refunds. We're going to say that the refund was in the form of cash. And so cash will then be going down for us, the organization. So we're going to be on the bottom. We're going to pick up the cash. Let's pick that up first. That'll be the easiest thing to do. There is the cash. It's going to be a credit. So we're going to be on the credit side in cell H25, negative of that 119,000. Then we're going to have a debit, and the debit is going to be going to the revenues and tuitions. So this might be a little bit different than a for-profit organization. We're not taking it to some other type of contra revenue account, but instead putting it directly into the revenue and tuition account, basically reversing the revenue account, which you don't do all the times in a not-for-profit. In a for-profit type of organization. In a for-profit organization, we might make another account that we would then post to that might be called returns and allowances or something like that. So this will be a little bit different than you might see in a for-profit organization, but same kind of concept. There is our transaction. Let's record this out. We've got the revenue, tuition, and fees. That's going to be up top. We are in cell Q18. Something's in it. Therefore, we're going to say F2 to go inside of it, plus F2, putting the cursor back down so we can scroll on over to that 119,000, bringing the revenue account down. Then we're going to be posting the cash. So cash is going to be down below. So, it's going to be up top in our financial statement, our trial balance. We're going to be in cell Q3. Within Q3, something's in there. So we're going to say F2 plus F2. Scroll back down. Then we'll pick up that cash number of the 119,000 and enter. And that should put us back in balance. Scrolling back down, we are back in balance here. So that's good. Then we're going to make another transaction for 8. This is going to be called 8B, we'll call it. And so we've already done this first one. Let's ungreen that. And this is the second information we need. Cash collections of tuition and fees. So we have cash collection of tuition and fees, the $1,538,000. The amount applied to next semester is the $141,000. That's the amount that's going to be applied to the next semester. And the investment income earned and collected is going to be $9,000. So we're going to start up top. We know that cash is going to be increasing. So we'll start with cash. Cash is going up. So I'm going to scroll back up top and we're going to pick up the cash. Now I'm going to put the amount in last. So we're just going to put the cash entry here now. And then we'll put the number in as basically the last thing, the plug type of entry. So we had cash collected of tuition and fees of the $1,538,000, and the amount applied to next semester is the $141,000. So that means the accounts receivable is going to be going down. It'll be going down by the net of those two because we got cash collections of total here, but some of it wasn't for this semester but was for next semester. Therefore, it's not in receivables. That's going to be going into unearned revenue. So let's post this out and let's see if that makes sense. We're going to say, all right, this is going to be equal to the accounts receivable. We're going to scroll back up top and pick up the accounts receivable. The accounts receivable will be, we're going to say, equal to this number minus this number. Because that's the amount of receivable, of the cash we got. This is the amount that was coming from receivables that we had billed for in the past. So we're going to say that. Then we need to make that a negative. So I'm going to double click on it. I'm going to put a negative sign in front of it and then brackets around it to flip the sign. So there we have that. Now, this amount then applies to unearned revenue. That's going to be unearned revenue because that means that it applies to next semester. We got money now, but it's not for this semester, it's for next semester. Therefore, we have not yet earned it. So it's going to go into a liability account called unearned revenue until we earn the money, until the semester basically starts or gets on the way. So that's going to be a credit of the 141, and then we're going to record also the investment income earned and collected, which is going to be this 9,000. So that's going to be revenue from the investments equal to the investment income earned. So let's see, it's going to be a revenue account, revenue investment income, and we're going to say negative of that 9,000. And then now we'll use the cash account as the plug formula using our trusty negative sum formula to sum this up. And there is that. So there's the $1,547,547. Let's record this out then. We've got the cash up top. Scrolling back up to pick up the cash. We are in cell Q3. Within Q3, we're going to say F2 plus F2. Scroll back down. And we're going to pick up that $1,547,000 and enter. Then we have the accounts receivable. So let's scroll back up top and pick up that. We are in accounts receivable. We are in cell Q4. Within Q4, something's in it. So we're going to say F2 plus F2. Scroll back down. Pick up the $1,397,000 and enter. Next, we have the unearned revenues. So unearned revenues, that's a liability account. That's going to be here in Q13. Something's in it. Therefore, we're gonna go into it by saying F2 plus F2. Scroll back down and pick up the unearned revenue. And then finally, we've got the revenue investment income. And by the way, unearned revenue, you can see increases in the credit direction because it's a liability account. And then we've got the revenue investment income. Revenue investment income is going to be in cell Q22, where we will say equals, point to that credit of 9,000 and enter, increasing it in the credit direction. So here's what we have so far. And that puts us back in balance. So we look good there. We're going to stop it here, and then we're going to continue on this next time. So this is what we have so far. So you can check the numbers on your side. And this is going to be kind of like the change, kind of like the net income, similar to the net income, the change in the net position. We're going to have to unhide these cells as we start next time, and then we'll continue forward to number 9.